John Higgins, Mortgage One. Happy Monday. So quick recap on what we saw last week with regard to rates. We had that big drawdown in rates starting maybe in the last week or so of October, and rates just fell through the end of the year. Ended up being maybe the best bond market in the last 40 years as far as rates coming down. So we're not too surprised to see rates kind of go sideways. We're hanging around that 4% level on the 10-year Treasury. And last week we had both the producer and the consumer price index come out. On the producer prices, that's prices paid on the wholesale level, we saw actual outright deflation. So it was a negative 0.1 print on the headline number for producer prices. That's great. Consumer prices a little more sticky. It was a mixed bag as far as that report went. Housing makes up a big percentage of the consumer price index, and housing is a major lag as far as the reading. So it takes a long time for lower rents and that to wash through. And we are seeing some lower rents, but it's taking a while for the consumer price index to come down. So the Fed, they have their own version of a consumer price index. They call it the PCE. That'll be out soon before their next meeting. And we're not expecting any cuts from the Fed at their next meeting. And the numbers, the way they're coming out now, kind of puts in jeopardy whether or not March will be the cut. I think the market, Wall Street, has a 50-50 coin flip on whether the Fed will cut rates or not. All in all, the job market continues to be very strong, which is great for us in the real estate industry because we need people with jobs. And the rates have come down enough that I think most of us would say that the year has started out a bit stronger than maybe it ended. And, we're looking at, rates that are not touching, decade highs now, where we've gone from near 8% down below 7% now. So all good news on that front. It just looks like the economy continues to click along here. Employment's good. Rates will be a little bit sluggish to draw down here, but overall, I think the market is much better shape to start the year than certainly we finished maybe the third quarter when rates were really spiking at that point. So we'll give you an update next week on what we see in the marketplace. All in all, again, rates are kind of going sideways here, a bit of consolidation. Shouldn't be surprised by that. And we'll keep the faith that rates over the spring, as we head into the spring here, continue to draw down slowly. Talk to you then.